Okay, so it's Thursday and it's Thursday. Okay, so I'm looking at what happened on since 5th July, more like 7th July, and mostly it's been an uptrend. It's been a bullish bias. Sorry, it's been a bullish bias. Like the markets have been going up on all consecutive candles. We have this one order block that's probably gonna be invalidated, but let's see what happens. That's the daily time frame, so you can have a figure of what I'm saying. Then down to the hourly from 7th July, mostly bullish bias. Then we came back to rebalance these imbalances, probably took out sell side. There was a stop hunt on yesterday, on Thursday, that took out the buy side liquidity. Then they aim for the sell side inefficiency. So, and there's also these imbalances that left yesterday. I probably think they want to take them today, but then there's this sell side liquidity that's been left. So my draws on sell side but I won't draw them on the hourly time frame. I'll draw this one on the hourly time frame. Let me just put it from Tuesday. I'll label that as my sell side, not my sell side. Okay, text. So that's my sell side liquidity, and the buy side liquidity was just taken yesterday. Okay, there was a stop hunt yesterday, so label that as the stop hunt. Right there, this was a stop hunt for this buy side liquidity on our time frame. Okay, so drop me down to a 50-minute time frame. This is the S&P. So on Monday, what did we have? Let's see what it had. I think I did one from 4th July. I didn't one on 5th, so let's see what happened on Friday. Like going back, so 8:30 is 8:30. That was 8:30. This was a draw on buy side liquidity. Looks like there was a stop hunt. This draw a line to indicate the liquidity. That was a stop hunt right there. And then they traded the sell side liquidity. Considering the bias, you'd be looking for buying opportunities. I don't really see a fair value gap in the 15-minute time frame, but we'll drop down to lower. There's this fair value gap and there's this swing high that was broken right there. Just point out the fair value gap for clearance, and that happened around 11, so your trade would have been in that. I didn't take this trade, I saw it, but you don't have to trade every single setup. So your trade would have been up to 12, and your risk, depending on what you're willing to risk, the low end of that fair value gap would have been the risk where you'd have taken your position, and let it run till 12. S&P 15 pips, and on Friday, and you'd have probably gotten in at 2:30 if, considering the bias continues with this gap right here. But ICT teaches you should also consider the first fair value gap. That's where setups are likely to happen. So this would have been the trade here at this tipping point, or maybe here, preferably, and let it ride out till 4. Your risk parameters would have been the lower end of the candle before the candle that forms the fair value gap, and that was Monday. So on Monday, Sunday, it's 9:30. The buy side liquidity has already been taken, and it's a 15-minute time frame. We'll go into lower time frame. So what are you aiming for? Well, there's this sell side liquidity, but I don't see a major draw like relative equal lows. Do you see them? Well, this might be a target as relative equal lows left. So swing low broken, fair value gap, but it's 12. You don't want to be in there when it's 12. And at noon, I'm really not seeing a setup. There's just this major stop hunt at 4:45, and then the market buy programs all the way into 4. so maybe not a good day. That was Monday. Tuesday, 8:30 when the markets open. Draw out your lines. That would be the sell side liquidity. Just annotate it real quick. Okay, let me use this because this looks like a better point. 8:30. That's you can use opening price at noon. I mean at midnight. We're below opening price. The bias is bullish, so that's our Judah swing. Then the buy sell liquidity taken out right here, and then the sell side liquidity, and it's just back and forth choppy. So not a good day to be in a trade. And the favorite got formed in at 11:45. That's very late. You don't want to be trading that time. And the signal is broken right here. There's no draw on liquidity, so I wouldn't be targeting anything. Then Wednesday it seems there was news. So this is the 9:30 candle, and this is fair value gap right here, and it's a continuation in terms of bullish bias. But I wouldn't take this plunge since I don't really have an objective, unless of course my objective is this swing high, but it's already technically been broken here. Trace back into it right there at 11, and if you were into this trade at 12, then you've probably got that, but then move went all the way till 3. It's a pretty big move. I see this thing, you kind of like just see it play out. Now this is the Nasdaq, I mean the S&P, which means in the Nasdaq it was probably times 3 of what you're seeing right here, and your SL would be just below that candle, 5 pips more or less. That would have been the trade, and then stay out after you win. So then it's Thursday, we move on to Thursday, 8:30, obviously using the 2022 mentorship. 8:30, buy sell liquidity taken right here, aiming for sell side liquidity plus this imbalances. So I don't really see a setup in this move yesterday. So let's drop down into a 5-minute time frame real quick and just analyze the setups from Monday. So Monday, let's go back. So here we are, 5th July, yeah, makes sense. So in the 5-minute time frame, as you can see, the fair value gap isn't much identified, but you have this smaller one. You have this smaller fair value gap here, traded into, that would be in your trade. The second one would be here, and at 11:40 you probably just be taking out your trades. Same case here, fair value gap traded into, targeting that. 5-minute time frame has potentially more fair value gaps. Okay, here we are again. No clear target unless of course you're targeting this sell side, and considering the range, this is like we're deep into a premium and expect a pretty much a retracement, obviously with the benefit of hindsight. Expecting a retracement, so they forms the swing low, and then the swing low is broken, and there's a fair value gap. I mean, it's all analogical right there, targeting that these lows, relative equal lows, short position in that trade, and it's 12. Well, obviously you'd have taken partials, but with no clear target, I'd say take your partial, one over here, one contract, maybe taking 3, one contract there, and then let the rest ride out till 12. So the rest of them just taken over here, considering you already took this, and maybe you'd have targeted this swing low as an objective. And I'm not really looking into what happened during noon because I already took the morning trade. And the next day, 8:30, you see there's a back and chop back and forth choppy price consolidation, stop hunt after stop hunt after stop hunt, and then at 130 this is huge. Well, I wouldn't consider this as my drone liquidity, so I'd probably just watch that happen. But yeah, we did take out a swing long, we did form an imbalance, we did trade back into it, we did leave these relative equal lows. Yeah, that's probably a target. These relative equal lows. So your trade would have been fixed on, but since the bias is bullish, I wouldn't really consider going back, taking short positions. But in the event that you were looking for a trade, that might have panned out, obviously with your risk. If you don't like the risk, you can go into smaller time frames. So Wednesday, see these imbalances that I pointed out. That was your first trade at 9:30. If you're waiting that eagerly, then there's a second one at 10:50, and then another went all the way till 4. So at 1:30, you'd have probably started hunting other setups, right? At 1:30, so I'm looking for an imbalance. So 9:30 traded into that favorite gap, traded again at 11, and these are the setups. I don't really see them unless it's 1:30. This right here would have been a setup, a continuation, obviously, all the way into 4. If you hadn't caught this move, it feels like chasing, but it's not. If you're confident in whatever is going to be targeted, that's a long position, and optimally would have been a very good trade. That was Wednesday. This year I already removed it, and Thursday 8:30 the news took out buy side. When the news rallies and takes out all buy side, you can anticipate the sell side liquidity being taken. This sell side resting here, sell side resting here, these imbalances, and this sell side resting here. Same case to this, and consider the fact we're already deep in discount when I showed you the 50-minute time frame. So let me plug another line to show the 9:30 candle. So optimally that would have been the trade. In fact, there's a very sweet one. There's two favorable gaps, but your trade setup should be in the first, aiming for. But I technically tend to like to stay out of trades that are against my bias because more chances is you're gonna get stopped out. But ultimately, that would have been a very good trade. 55. Wow, that's insane. And then there's today. Pretty much consolidated during noon. So then there's today. The news just took out all the sell side, as you can see right here with me like 5 minutes ago. So I can tell you for sure, not for sure, okay, I can't assure you, but most likely we'll be targeting these imbalances that were left yesterday after this stop, and the news just came out. Seems it wasn't friendly. Okay. Yep, the news just came out. There's news at 5, so I'll probably just wait till 5 if I was you. So yeah, that's where we are right now. We'll see what happens. Have a lovely day.